Don't forget, Frank Napolitano joins us. Frank, Kavanaugh Construction, people you probably know.
Very well.
Give us a dozen tickets in the suite and 4 parking passes to the Beebs tonight.
Fantastic.
Yeah.
Fantastic.
Should be good.
Yeah.
Hey, listen, changes in mortgage rates, right? The interest rates have changed a little bit in the last little while.
Yep. A little bit of an increase over the last, which we haven't been accustomed to in a little while. So interest rates went up on most fixed products around 0.5 point or so.
Now people are asking you the question, what should I do here? Because I see a trend of interest rates going up. Should I lock in or do I go the variable? What do I do now?
Well, we're getting that. We're getting a lot of customers are sitting in variables that are sitting at prime minus 3/4 and wondering whether it's time to lock in. And then we've got the other side, which is now that the gap is a little bit larger, where you can get a variable today at prime minus 45. So now you got customers saying, well, wait a second, at 2.65, maybe I should start with the variable and see what happens. So it's an interesting question. I think
it's a bit of a gamble right now?
I think
that's loud.
Yeah. I always think there's a little bit of a gamble involved in a variable when we don't know what's going to happen with interest rates. That being said, it's been a very profitable gamble for many that took a variable over the last 3, 4, 5 years, because many of them have averaged close to 2% on their mortgage, which is phenomenal.
Hello. I like that.
So
it's really
amazing.
Worked out for variable people.
Unbelievable. So for those individuals, and I always say, listen, if you're going to take a variable, at least help yourself by making more aggressive payments, so that you're going to knock your mortgage down quicker, and you're going to put yourself in a position where when rates do go up, that at least you've got less owing on your mortgage, and you're able, and at that point you're also accustomed to what the payments would be.
Right. I gotcha. That's a good point.
So that's
because when it comes down to it, mortgage is your biggest cash outlay of the month.
Yep.
Or the bi-weekly, whatever you go.
Typically.
So knowing or having an idea what that's going to be is key to your budgeting and so on. Right?
Absolutely. And there's, again, be very careful. The one thing that I will caution people, if you're going to take a variable rate mortgage, is know what the rules are to get out of the mortgage should you sell the property, where the standard is 3 months interest. There are a couple of institutions out there that have now changed their fine print, and the penalty to get out is 3% of the balance. So it's no longer 3 months interest, but 3% of the balance. Much different scenario there. So be very careful.
Yeah.
And the other thing, when you're ready to convert, you need to have a good relationship with the bank that you're with or the broker that you're with, and make sure that they understand that there's a good chance you're going to lock in at some point. And if you're going to lock in at some point, you need to make sure that you're with an institution that's going to give you that best rate up front, and not hold you to the fact that you're locked in for 5 years or 4 years,
right? And
this is the best we can do, when it's not really the best they can do.
Is there an argument for locking in right now?
Is there an argument for locking in? If you're in a prime minus 75, I would say no, or even a prime less 50, which a lot of customers are. I would say no, because it doesn't look like Bank of Canada left prime the way it was last week, and most experts think that prime isn't going anywhere until at the very earliest a year from now.
Oh, really?
And potentially up to 2 years from now.
So this little wiggle in the interest rate was just a little wiggle.
I think it was Bernanke that made some comments on
it was
stop
Bernanke
printing.
they were talking about last week.
And then, of course, the job report came out not even 3 or 4 days after that, and therefore the job report was very healthy. It'll be interesting to see how the job report is over the next month or two. But again, the markets react real quickly to that 1 month, where if they look at it over a 6-month period, there really hasn't been that much creation.
I think there was a time, too, when interest rates really reacted a little too strongly to certain things that were going on in the world around it.
Yeah.
And I don't think that's the case anymore.
Well, I think the world economy seems to have stabilized, because all the stories, like over the last few years, all we've heard about is Greece and Spain and all the troubles there.
Yeah.
We don't hear about it as much now, because I think they've come to terms with where they're at.
And I think the Bank of Canada has understood that having a low interest rate is a good idea at this juncture in
well, I think it's allowed the economy to do what it's done.
Well,
it's allowed
exactly.
our housing prices to remain where they are.
Well, why do you think it's exactly the reason why Canada, the whole downturn in the economy and the R word, the recession, Canada virtually unaffected by that.
Agreed.
And I think interest rates had a lot to do with it.
Agreed. And the government takes a lot of heat, but they did that right.
They've done that right. You got to give them credit once in a while.
Yep. Just leave the mortgage rules alone, though. I mean, don't tighten the mortgage rules anymore, because that's going to affect the economy.
Did you hear that up there? Huh? Anyway, good to know.